Hey guys, this is an exclusive video for you. Let's take a look at Bitcoin, and we're going to start with the daily. So the daily, as you can see, there is a resistance. We've probed it multiple times this week, starting Monday, and we're unable to close above it, as you can see. Also, there is now, if you take a look at the 4-hour chart, we do have this inverted head and shoulders, and we also have this consolidation range play between 56 and 59,000. So tomorrow is NFPs. So I think tomorrow is going to be the catalyst for a very explosive move one side or the other, depending on the number of NFPs. So that's why I'm not making a call right now for anything. But as you can see, there's definitely more room to go for the correction. So we can easily, we took a breather just to get a little lower to this trend line support here before we actually produce a bounce or breakdown. But if we do start bouncing and then we break this trend line, you can buy the first bounce and then the breakout of this trend line here. Now, if tomorrow we have a, well, let me go back a little bit. After, what happens is, why do explosive moves happen after consolidation? It's like a coil in a spring, stored energy. You coil the spring first, and then you release it, and the release of energy goes sorry, I'm getting text messages. Yeah, so the release of energy, what happens is in the psychological background of the traders who've been trading this range, we buy 56 and then we buy sell 59, right? What happens is, let's say this thing starts moving and it takes out 60,000. What you want to do is wait for a little bit of a pullback for those people who push the price up to enter. You're not going to get a pullback. I'm not talking about waiting on a pullback on the daily or even 4-hour. Maybe I'll just switch to 1 hour and wait for a little bit of a pullback to get into that play. Because usually, let's say 70% of the time, when you have an explosive move out of consolidation, it usually follows through. Why does it follow through? It's very important. Well, the reason why it follows through is because people are still stuck in the mentality of a range. They think, oh, this is just a little bit higher than the previous range extension. It's just a range extension into, but it's still in the same vicinity, same range. So let me short this. And as they getting stepped out and liquidated on margin call, et cetera, the price keeps rising. And the people who are trying to short the range, they have to cover their shorts and get out. By covering their shorts, they have to buy into the market. So because they're in a short position, to get out of a short, they have to buy a position, and that buy adds volume. So things spikes up, and usually has a very decent volatility after a nice consolidation like we've been witnessing pretty much all of this week. Same applies to the downside, however. Since I think it's gonna be very news-driven type of event. Unfortunately, I can make cases for bullish and bearish cases, and I cannot assign an equal. I'm sorry. I cannot assign anything but pretty much an equal weight, 50-50 chance. And if it's a 50-50 chance, and again, maybe somebody knows more than me and has a 70-30 view on bull-bear cases, right? So they're going to be following their 70% because that gives them an edge. When I don't see an edge, I do not trade because my psyche, my psychology, the way I see the chart, it doesn't strike me as a low-hanging fruit or that I have an edge for me to just enter. And to enter just for the fuck of it, that's gambling. And I might as well just fly to Vegas and do that there with drinks and other condiments. So no point in just gambling. So, but it's going to be very important to see, because where's the drawing tool?